Make sure it's all where it's supposed to be. Okay. Jason and I, so we're here to talk legislative updates, right? So a big piece of being involved with UAMP, we are your state mortgage association. So the biggest part of what we do, it seems like we hold monthly luncheons, and that's the biggest part of what we do because that's most of what you guys see, right? And that is a big piece of it. But the bigger, I would say most important piece is we are directly involved with our local and national representatives so that we can help advocate for consumers, advocate for our industry, understand what's happening, what bills are going through, what are the pain points that are coming up, what discussions do we need to have, and bringing that awareness to them. A lot of our representatives are not mortgage professionals, nor do they have a history in the mortgage industry, and so they don't fully understand how all of this works or what the impact of some of these decisions could actually have. They may think they're operating and working in good faith to help the consumer, but we sometimes show up and say, that's really great, keep going, or hey, here's some of the things that are going to impact this maybe in not such a great way that we probably need to consider, right? So we got feedback from you guys, which we love to get, saying that you would love to hear a little bit more about what's happening, what's taking place, what conversations are going on. So we want to go through that today. Jason Gautreaux, he is on the board with us, on UAMP board, and he is also our government affairs chair, local chair. Is that what we call you these days?
Yeah.
And then he is also our MBA affiliate, representative person. So he works directly kind of most in contact with the MBA and is very involved with them and finding out what they're working on and what stance they're taking and who they're speaking with, okay? Lauren Patterson, who is supposed to be speaking, is not here today, so instead you get to hear from me. He is on the NAMB board, so National Association of Mortgage Brokers. He's actually flying today to go to their conference that is happening over the next couple of days in Florida, so he couldn't be here. So he has given me the updates and the information from the NAMB side of what is going on so that we can both kind of go through with you, tell you what's being talked about, what's coming up, and we also want to hear from you. So as we're talking about these things, what questions do you have? What do you think the impact will be? Because that is information that we as UAMP can take back to these organizations and can take back to our representatives and share that with them, saying, hey, a room full of mortgage professionals that interact daily with people, this is what they're saying, or this is what they think we should be looking into, right? We also have Representative Jacob Sawyer with us today on Zoom, I believe. There he is. Thank you, welcome. And so we are going to be able to hear from Jake for a few minutes. A lot of you, who was on the Capitol Hill with us last April? Handful of people in here. So Jake was with us there at the Capitol. We are planning to continue that meeting in April again this year. So we'll have information coming out on that. We'll meet at Capitol Hill. We'll have local representatives there where we can speak directly with them and go over some things. So we are going to turn the time over to Jake right now for a few minutes. And if you will just share with us, Jake, one, a little bit of your history, and then two, what's new on the street, what's happening, what are we discussing, just any information that you can share with us so far.
Yeah, well, thank you. Thanks for having me, everybody. Love being with this group because obviously I'm an old mortgage guy, so love talking the lingo and being in this group with you, so thanks for having me. My background is mortgages. I've gone through the banking channel, the broker channel. I will tell you, because I think you guys will get a kick out of it, I left mortgages in 2021 because I got so, I don't know, frustrated as we all get with the industry, and I happened to be working for I guess they're not really around anymore, so I can say their name, but Homie. I ran Homie's lending department, and it just absolutely wiped me out. So I haven't been back to mortgages since, and I thought I might take on a legislative role maybe to try and fix some of the issues that we have. So Couple of things. The first one I want to talk about is the 203K loans. I'm sure all of you have been involved with those or used those, or I use those a lot with my clients, and I've actually used them personally myself on a few homes. A couple of years ago, the Senate President, President Adams, opened up a grant program you guys are familiar with, $20,000 through Utah Housing to help with down payment assistance. I wanted to expand that program because I don't think we can find borrowers to buy a brand new home at $450,000. I don't think that's really helping the mass market. My thought was if we could expand that grant program and add in the 203K option, that way people could go and buy a dilapidated home or a home that needs to be fixed up, use the $20,000 to get them into the house, and then they could realize those gains when they start making those improvements to the home. It's happening all over the state. Cities are actually doing this with taxpayer funds. They'll go renovate these homes. So I've been trying to work with Utah Housing to get them to open up a 203K product. I know they've had one for years, but in talking with them, they know that they can open it up a little bit more. As I've talked to the Senate and leadership about opening up the grant program to allow this 203K, they're not very optimistic for that. So there isn't necessarily language yet for that, but it is discussions that are ongoing. So just to be aware there, any help from you all and your clients, that can absolutely help. Another one that we are just waiting on language for is about wire fraud. So we know, we all see the issues, and I'm sure we've all been involved or heard of cases where somebody has sent their closing costs or down payments, everything through a wire, and it gets sent off to China or wherever. I have a bill that we're currently working on to try and figure out how we can close that gap. And what we're finding is the biggest issue is Gmail. People go to Gmail and they use that since it's a free service, and they communicate through there. So we figured we needed to create a closed communication network where anytime it becomes a real deal, which we all know what an actual deal is versus an application, once it becomes a deal, then it has to go into this closed network of only those that are involved with the purchase of with the transaction can be involved. We're still going through those negotiations because, as you know, the big banks and credit unions are federally chartered, and so we can't interfere with their way of doing business. I know that sounds like they have free reign to do whatever they want, which they don't, but it adds a layer of complexity to this whole thing. So right now, the way it sits, the bill is written to have a 5-person commission that oversees kind of all these communications that go on. And me personally, as a legislator, I don't think we need another commission or another board or another advisory, whatever, to make rules or make our life harder for this. I want to protect consumers, but we need to also protect, our industry and what we're trying to do. So any suggestions or any thoughts would be absolutely welcome on that. I also have a third bill that is being released today or tomorrow. Isn't necessarily a mortgage bill, but it's a property tax bill that I'd love for you guys to know about. In our school districts, I'm sure you guys see it with the taxes, that as you're estimating payments, taxes are going out of control, and it's because of the spending that we have going on. One area that I think we can help with that is through our K-12 school districts. If you look at transparent.utah.gov, you can look up your school district and see salaries and money that is being spent on administration. And one that I'll give you, just to emphasize a point, it is an outlandish one, but if you go to the website and you look up the Davis School District, the assistant superintendent, and I'm not kidding here, is making over $700,000 a year. $300,000 in salary and $300,000 in benefits.
I think we're in the wrong industry, huh?
Amen, tell me that. So this bill just kind of caps those yearly increases that they get. So they aren't going out of control. It puts it more in line that you can't wait out your benefits over your salary. It kind of puts a structure in place for how this pay should be working for the taxpayers. So those are kind of my big 3 bills that I feel would kind of intermingle with this group. So any questions or comments, love to take them.
Awesome. Thank you, Jake. And we appreciate you taking time to be here with us today. And sorry, you're getting the view of the back of everybody's head, but that's the best we could do with this. So questions or comments or thoughts that you guys want to share with Jake on what he just shared that he's working on? And I have to put you on the mic so he can hear us.
Thanks for your service. I just wanted to ask if the title industry has been invited to give input on your wire fraud bill.
Yeah, thank you. So we have had title in. They've been very supportive. The issue I've said before, and again, all of the industries are on board with this and they want to figure out how we can solve this issue. It's the federal players that we as a state are having trouble figuring out where that legality is on how much can we tell them what to do and what not to do. And so the discussion has gone, do we carve them out? Do we carve out federal banks and credit unions? That way it kind of becomes more of a pressure thing where the industry here in Utah, you all along with the realtors, along with title, insurance, whoever, can band together and show that we care about our clients. We're gonna make this network work and happen. It would kind of force those big banks to then figure out on their end how they can match that same effort. But yes, to answer your question shortly, title has been very much involved in this conversation.
Awesome, thank you. Caitlin, did you have a question?
Yeah. I'm not sure you know the answer to this, but has there been any communication about re-upping the law enforcement grant that Utah Housing had? You mentioned the new construction, but they're out of funds for the law enforcement grant.
I've heard that, but I have not heard about any of the discussions necessarily going on there. I do have a call with Dave Danchin tomorrow to kind of go over more of the 203K stuff, so I'll make sure to ask him about that.
Awesome, thank you. Okay, we got another.
Hey, Jacob, is there talk of maybe opening up that grant, the President Adams grant, to more people than just Utah Housing?
No, yeah, so, no, unfortunately not. That grant, as I found out, is very, very, very heavily guarded. I've tried to make cases, as you all see, the money is still sitting there, more than half of the money is still sitting in that account, at the end of the year. To me, that tells me it's an unsuccessful program. I think we could have much more success if we could open it up. The thing that we need is support from you all. If you email, call, whatever, to President Adams, that will absolutely help get his attention that this is something that we need. I don't think he sees necessarily the impact that could have. President Adams comes from a commercial side of the industry, and so I don't think he quite has the residential side, as much as all of us that work in it every day.
Thank you. And we did speak with Utah Housing on that too. Kenny and Lauren and I were at Utah Housing for a roundtable. A lot of that was they said they just need to monitor the funds, and that's why it has to stay within Utah Housing, which, yes, but also super restrictive and not a super beneficial option. So again, like Jake said, email, call, we have to show up and say things, because if we don't and we just sit in the room together and say, well, that program's not very helpful and I don't know why they don't do something else, then they don't actually know that it's not helpful and that we need them to do something else, right? So the more we can show up, the more we call, email, talk about this, give feedback, ask questions, the more we can help change things too. So any other?
Just to add on to that, I'll say, so the one thing that I'm brand new to this, I just took office in 25, so I'm just coming into my second year of this, my second session. What I have found here is that the representative, or whoever happens to hold the position at the time, they can get anybody to answer the phone, because nobody wants to miss a phone call from a legislator. So that's my job. That's what I can get done. But as far as changing real policy and getting things like this grant program to open up, that doesn't happen by me. That's you guys. If I go and I tell President Adams and Dave Danchin, I don't think we're spending these down payment funds as efficiently as we could, they will show me chart and graph and reasons as to why they've got it under control. Now, if we have this entire group, which I can see the first 3 rows, even just that, if we had an email from every single one of you to Dave Damshin or the Senate President saying the exact same thing, it would land like a bomb went off. They would hear it, they would have no option other than to hear you guys and what you have to say. The power truly comes from the grassroots as much as possible. I'm just a mouthpiece with a good phone number. So that's about all it is.
Where do we email it? Give us
So-
the contact info. Let me put it on the board.
I was gonna, yeah, she said, who do we email, where do we send it? So Chris
Yeah.
Buckway in the room, I'm gonna call on you. Can we find those email contacts and we'll send it out to the people that were here today
With the script.
with the
Yes.
script?
Would be ideal. With what?
Chris is like, I'm not writing the script, but I will get you the contact info to go out. Yeah.
Yeah.
Chris has a really good friend named Claude that he can reference and will help take care of that.
You can always find contact information at
It's on the website.
le.utah, spelled out, UTAH.gov. You can look up any legislator there to get all of their bills, all of their contact info, everything you need there.
And we can include that email or that site in the email as well so that you can just have easy access. Because I know in the past I've felt the same way, like everyone says do these things and I don't even know how to do these things. So we can put together an email to send out to just give you that contact, and then now you have 0 excuses. So if you're passionate about this and want to see change, then like he said, it's like a bomb going off if everyone reaches out, right? Yes.
Can you just have them repeat the LE dot?
Oh, will you repeat the web address, the website? LE?
Yeah, le.utah.gov.
Brittany, I have a question for him as well. Hey, Jake, it's Jason.
Hey.
On your wire fraud bill, would any federal advocacy help on the bank side of things?
Looking at it this year, next year potentially for sure. This year, we're just going to take at it from the state level. I know we've talked to the Arizona Attorney General. She's wanting to take the language that we pass in Utah and give it to her legislature to try and pass it in Arizona as well. Once we start to get more of that kind of regional footprint going, then I'll definitely reach out to you to try and get some help there.
Thank you.
for that.
Okay, any last questions for Jake? Okay, awesome. Well, Jake, we super appreciate your time being here with us today. I don't know where to look. It's the weirdest thing. So thank you. We appreciate it. We hope that this gets some change and a little disruption. We got one more question.
Not just a question, but a comment to everybody. I had the opportunity to serve on a city council in one of the communities in Utah several years ago in Taylorsville. And one thing I found when somebody called me, it was interesting to get their input, but it was also interesting for me to call one of the other members of our city council and ask what their position is. So I think that's something to offer up to you. What's your opinion, but who are some of the other people who are your colleagues, in this case in the legislature, that have similar opinions? How can we spread the word or our opinions to more than just you? Just a thought.
That is a great question, and thank you for asking it. That same website, I would find your legislator, right? That where you live, I would find your legislator, and I reach out to them and see what their thoughts are on it. If you're trying to find somebody specific towards these bills, let me give you my cell number, and I can go through a list with you there instead of trying to take up time in your meeting. But my number is 801-641-5928. You can call me, text me, whatever you like. Again, 801-641-5928. If you're trying to get a hold of legislators, right now it's going to be pretty crazy because we're starting a session next week. I would always, texting usually works pretty well. If you can't get a hold of them there, get a hold of their interns. We all have interns. Their numbers should be listed publicly on the website that I gave you earlier as well. Interns are very good to help get us in the rooms that we need to, especially if we need to step out for just a couple minutes and have a quick conversation. We're more than happy to do that. So, thanks again for your time today. Hope you guys have a great rest of
Jake,
the day.
one last quick question.
Yeah.
Representative Clancy has a bill on APRs and costs. I haven't really been able to connect with him
Okay.
Are you aware or familiar with that bill?
I'm not, but I will reach out to him and see what he's got going, see if I can get some language for it and shoot that over to you.
Okay, appreciate it. Thank you.
Yeah, absolutely. Okay, thanks everybody.
All right, thank you, Jake. Appreciate it. Round of applause for Jake. Thanks for your time. Okay. Done with that. No more technology for me today. Filled my
Brittany, what is Jake's last name?
Sawyer.
Oh, we got these things.
This is for the camera, not the room.
Oh. Okay.
You get 2 mics because
get
you're
2
extra special
Wow.
today. All right, bear with us, guys. We're gonna get through this. There's a lot of info. Basically, we want to share information just like what we just did with Jake. Let you guys know what happened last year, which I'm gonna have Jason touch on at the beginning, and then what are the new initiatives. What is everyone focusing on this year? And we're also going to cover some of the announcements that have come out and kind of get some of your feedback as well. So I'm going to let you start us off with my 900 papers. What were the wins from last year?
So the wins, do I even need to? Can you guys hear me without this? Yeah. Okay, good. Come on, Dan, you're full. Okay.
Every time the speaker says, "Can you hear me without this?" they assume everyone can, and someone can't.
I know.
And then I walk to the back of the room and I'm like, you guys are liars because you can't hear anything back here.
Yeah.
So use the mic.
Okay. So big wins from last year from the Mortgage Bankers Association. Home Buyers Privacy Protection Act. So banning the use of trigger leads, which will go into effect in March. The foreseen or unforeseen consequence of that is what our credit bills look like these days. So has anybody seen what their credit report costs look like? So we're going to touch
So
a
guess
little.
what one of the new initiatives this year is?
Yeah, so there's several new initiatives, but the mortgage bankers, we'll go through it here in a little bit, have a proposal that they're advocating for to help reduce that cost for us on the front side. That goes into effect in March. So if after March 1st you start to get people talking about trigger leads, that they're receiving them, I would definitely let somebody know, let the state of Utah know. We passed House Bill 99 last year, which penalized with a $1,000 fine per incident in Utah. So not only is it federally banned, it's also fined here in Utah. Second big win for 2025 is VA Home Loan Program Reform Act. Basically, that authorizes the partial claim loss mitigation for distressed veterans to help them avoid foreclosure. You guys all know what that means? You can tell me you don't.
Share with them and hold the mic closer to your mouth.
I'm sorry. What that means is that if a veteran can't make their full payment, or they can't pay all their taxes in a given year, that the VA will step in and make up that difference. And they'll record that amount of money that they pay as a silent second lien on the property to avoid the property going into foreclosure.
So it opens it up more similar to like FHA.
Correct.
That-
Yes, that went into effect in
Oh, yeah, that was
July of 25. July? Yeah, July of 25. Those were the two big wins for 2025.
Yeah, that was NAMB's, that's not what it's actually called, but the trigger lead bill, we worked on that since like 2017, if not even sooner than that. That one took a very, very long time. So it's actually cool to see that like get passed and be done and show that all of those efforts, like we kept going to DC and every year that was like the same thing that we're bringing up, right? But it takes that long. So that's why you want to start talking, emailing, calling, like, so that these things, and it doesn't, not every single one will take that long, right? But it takes some time to get this stuff done. It's the government, right? So it's really awesome to see that one actually like finalize and go into place, so.
Yeah, I can share with you from an advocacy standpoint, 3 years ago when we really picked up trying to be advocates and working with the state and working more on a federal level, our representatives and senators are very well-rounded, good salespeople. They don't know a lot of details about different stuff, especially mortgage and housing. So reaching out to them really does help, like what Representative Sawyer said. Getting some FaceTime with them, sitting down, really explaining the position of the mortgage industry or the real estate industry is hugely beneficial for them, and it can enact change.
Yeah, because otherwise they just don't understand what's really happening on the backside, right? So, okay, what's coming up, like for the government at the end of January?
So eminently, we could potentially have another government shutdown. I know you guys are all super excited about that. It's not expected to happen. It got too much bad political press for both sides of the aisle when it happened last time, for however many days that was. They're expected to continue to kick the can down the road with partial resolutions and extending temporary budgets. If in the event that it does shut down, flood insurance will be affected. FHA, some things on the FHA side will be reduced and could be affected. However, transcripts won't be affected. Anything with the VA won't be affected. That's been funded through the end of 2026. I think it's your turn.
Maybe. Yeah, I've been speaking a lot already today. Okay. Then, so first off, going into this year, housing affordability policy actions. I'm also going to let you run with this one to start. You're doing such a great job.
Okay, so keep in mind, this is from the mortgage bankers side. It's very similar to NAMB, so Brittany can kind of piggyback off of some of this stuff. And stop me if you guys have questions on any of this, want to have conversations about any of it, because this is really should be an open forum, because we're all trying to accomplish the same things. Some things you guys have probably heard, which now I think is shot down, but a 50-year mortgage. There's a lot of inherent problems with, or hurdles with a 50-year mortgage. Lisa and Karen can show anything over a 30-year mortgage really becomes a non-QM product. And the rates on the non-QM products are going to be that much higher, where it's, in my opinion, almost as beneficial as a 30-year loan. The only way to make it a viable Fannie Freddie product, from my understanding, is the CFPB has to allow it per the Dodd-Frank Act. And the last I checked, the CFPB is basically shut down, so I don't foresee that. I don't foresee that happening.
They'd also have to create FBS for it.
Right, yeah.
What was the question?
Oh, they would need to create mortgage-backed securities for it, which there's not currently. And I don't know, if you guys were around for the whole 40-year thing, the rate was 3/8 of a point higher. And when you started running the numbers, yeah, it saved a little bit of money on a monthly payment, but it wasn't, it wasn't a lot. Another thing that I think's been shot down, portable mortgage. From what I'm seeing from the administration is and you guys might hear this in Housing Wire, they float a lot of these crazy balloons up in the air and say a lot of this stuff to see what public reaction is going to be. And if it starts to sound good, then they kind of take it a little further. And when it doesn't sound good, they kind of really start backtracking on a lot of that stuff. So the portable mortgage was another one of those things where it sounded good for a minute, and then details started to come out, and everybody was like, "No, it's a bad idea." Mortgage Bankers Association is not behind the 50-year mortgage, nor is it behind the portable mortgage.
It's kind of one of those, like, let's throw it at the wall and see if it sticks. We don't really know what it means because we're not mortgage professionals, so we're just going to come up with some ideas to show that we care about housing affordability, and then we're going to see what happens, right? So,
Good.
yes.
I just wanted to say something.
Yes.
Piggybacking on what you just said, which is, I think, what we learned going up to the Capitol last year was that our legislators, also there's a lot of legislators that do care about working on affordable housing issues and accessibility issues, but they don't know what will actually be helpful and effective the way that we do. And we have a lot of voices up there that are representing builders, and agents, and maybe they're representing policies that are in their best interest, in the best interest of their bottom lines. But
not the
we-
consumer per se.
We want to show as a community that we care about our communities and our buyers and issues like that. So I just think that it's kind of the same on the state level. Like they want to
Mhm.
work on some of these issues, they just don't actually know what will be effective.
Yeah.
So that's where we can all come in, even if it's like us drafting canned emails that you guys can all send on your own to your own legislators, just to show that there's a lot of professionals that really care about, helping to change the landscape. Because it's just getting harder.
Yeah.
For us and our kids.
Yeah.
It will be harder for our kids in the future. So.
Yeah, absolutely. Hold on. I know, but just for funsies to get my steps in.
Hey, so that's the thing though, going to the comments of like getting our elected representatives to know what's going on, because if you look at the things they say, they're pretty much following advice they get on TikTok. I mean, right? Like you see something about a 50-year
Wait, aren't we
mortgage.
all following
Is that
advice we got on
not-
TikTok?
That's
We-
where Bucky shoots.
Right? But that's where a lot of them, that's where, not a lot of them, because we go there are some that are very intelligent, they know like the real issues and what's going on, we sit down and talk to them, they're like, well, yeah, they'll talk about real things that we know matter, right? But every once in a while, but the stuff unfortunately gets put out there, 50-year mortgage, what's another one? Oh, institutional buyers, banning all institutional buyers, which at the end of the day.
That's
oh,
next.
Is that
That's
You're
next.
skipping, you're
Okay,
skipping.
we won't go there, but I'm just saying like, my point is that we've really got to get the message out there somehow, because there's too much TikTok. That's what we get in their advice right now, like quick fixes that we know aren't gonna work. Are we gonna talk about LLPAs today too?
Yep.
Yes.
Yep.
If we
You
have
be careful, or
time,
you're going to be in a chair up here at the front.
yeah.
So
Chris should come up here.
he can. He's welcome. Good. Okay.
One of the things, so Timber brought up some of the state stuff, things that we can do. One of the things that Timber and I have been working on, and UAMP, do you guys see when you're doing FHA loans, condos? There's not a lot of condos in Utah that are approved, FHA financing. I don't know, maybe I'm crazy, but I don't see a lot of them approved. Yeah. What I found from out there doing research is they're not approved because the HOAs just don't apply for it. They don't have the time, B, they have no idea what to even do or where to go. Part of last year's session, they changed they require HOAs to register with the state. And there's an online registry that they have to do, and the HOAs have to log in, and they have to update their HOA documents, or not HOA information every year. So one of my proposals, or our proposals I've been working with Representative Sawyer on it, is to have the HOAs put the required FHA documents into this portal as part of the mandate, so that any of us originators or mortgage companies can go and register on that, so they know who's getting the documents, so that we can actually go forward and try to get that condo development FHA approved, if we want to, which will hopefully open more doors for a lot of those people. So that's something I'm actively working on.
I have a question for you on speaking HOAs. Most people are using companies to do all their HOA stuff. I mean, has there ever been talk about the fees that they're charging?
So yeah, so in, what was it, October, November? So all year, so from May of last year, 25, through September of 25, they had a special housing session. They actually had 4 special sessions last year, but there was a housing section of it. Utah Association, we had a member on there, and then Holly in the office was on there as well. So Holly could probably speak better than this, to be honest. I wish she was here today. And I don't know, Brittany may know from Lauren, because Lauren sat on it.
Yeah, sure.
But HOAs were one of the biggest things. And capping the fees that they can charge in a given year and how much they can actually increase in a given year. The slippery slope of that is the state of Florida does that, but they can do special assessments to circumvent that, increase of what it is.
Well, and I'm not talking about just the fees from the condo association. I'm talking about the fees they're charging from the who's servicing and sending us the HOA.
Yeah.
That's just,
Yeah.
it's gotten out of control. You need one extra thing and they make you pay for the whole thing.
And then they take like 3 weeks to get it to you, and you're like, you just had to push a button and generate the form. Yeah.
Yeah.
So yes, it is. It is.
it's a hot issue, but
And
nobody knows how to.
reinvestment fees too, are they looking at that, reinvestment fees?
Oh, I don't know. I don't think reinvestment fees have been brought into it,
Yeah.
but we can bring it up.
I think Holly was kind of talking about too, the potential of capping what percent the HOA fee can be of the PITI. So, because, for
Okay.
example, was, you're getting someone qualified, and then you get their HOA fee back, and it's higher than the principal and interest they're gonna pay on this loan, because they're paying $500 to the HOA, you know?
Yeah.
So I think there was some talk about that.
Yeah, so it's definitely a problem, and it's something that our state is aware of, and that was the hot button from the special session.
Okay. More.
So to piggyback off what Chris was saying, so there was a proposed ban on institutional investors from buying single-family homes, not multifamily, but just single-family homes, which I guess, from what I understand, is going to be addressed at the World Economic Forum in Davos in 2 weeks, something like that. Representative Benyon in the state of Utah last year, along with Representative Clancy, both had bills up on the House that fizzled in subcommittees around this exact thing. One of them put certain companies like BlackRock on the list and other major corporations on the list so they couldn't buy the homes. Both of those bills died because it just wasn't going to get a lot of traction in Utah. But then they additionally found out that only something like 0.1% of homes in Utah are owned by institutional investors. Yeah, and it wasn't worth all the pain and suffering to go through trying to get it passed. From working with the Mortgage Bankers Association, they've brought up that there's certain areas and cities in different states that actually do have an issue with this. My take is that it really should be a state issue where they should take it on and not be a federal issue, but we'll find out in 2 weeks how they're going to address this. Most recently, President Trump had comments on Fannie and Freddie purchasing up to $200 billion worth of mortgage-backed securities. Mortgage Bankers Association is really not behind this, of them doing that. They don't really feel like it's going to make that big of a difference, and it's going to create more problems than good. Their approach is to reduce LLPAs on both purchases and refinances. So that's what the Mortgage Bankers Association is advocating for, which I think helps obviously the people with less, worse credit, and helps housing affordability for people. I don't know. I mean, I've been around doing this a long time, and there never used to be LLPAs. Kind of the interest rate was the interest rate, and then the government started getting greedy. And I don't know why they just don't take the hand out of the left pocket and just give the credit back versus trying to find a solution in the right pocket.
The LLPAs were really designed to help recapitalize Fannie and Freddie,
Correct. Yeah,
and so,
we've done that.
Yes. We've well beyond done
We've
that.
done that 100 times over. Reducing FHA MIP premiums. Chris, go ahead.
What is NBA, so what are they have official proposal that they're giving to our representatives about how to address LPAs? Do we know what that is? Or is it just generically we know they're talking about it?
They've written a letter,
Okay.
which I don't really know what that means. I mean, I don't know. I write letters all the time. I don't know. That might be an email now. I don't know. But they've written a letter to Bill Pulte, the FHFA, saying you should get rid of your LLPAs. I would encourage everybody here to do that.
I agree. I was going to say, I think I agree with the assessment. LPAs, if you can reduce it. I mean, it's just shocking to me how much different rates are between my borrowers. Even the dumbest thing, I did one, and everyone's aware of this, I know you are, but like, we went from, what was it, 80 to 85, that whole conversation, right? And it made me mad. like that it worked that way, you know? And so, like if we get that in front of our representatives, if we're sending notes to them, we're talking to them, they're seeing stuff, they probably have no idea what LLP is. We use acronyms in any industry, right? Like you have no idea what it means, so they need to be educated. Like that'd be a great start. Probably not so much your local ones as your national ones, so that when we go and advocate for you in April, like maybe they've heard about it and they're not just hearing it from us when we show up that first day, you know?
That one
Yeah.
specifically from 80 to 85 is because then you have MI. So they've got additional coverage. So that one, you know, makes sense because you've got the insurance, but
I've heard that, yeah.
Yeah.
but
There's others though.
the others, yeah.
Like,
I mean, it's a part of risk-based pricing.
mine wasn't, actually, you know what mine was? I think it was from 85 to 80. And it went up. I was like, what in the world are we doing? Right? And I guess that's more insurance, that's true, that's a good point. But still, it's crazy to me.
Were you talking about?
Here, I'll add in for
Oh,
that
go ahead.
one while we're on it,
Or
which is just to say NAMB is also working on it, so it's coming from both angles.
How did I draw this straw?
Huh?
How did I draw this straw today?
Hey, you did great.
And their income comes back in and then you're up like as the quarter of the coin or whatever. So, yeah, that was pretty cool.
Yeah, so reducing or eliminating LLPAs is also on NAM's initiative for this year. So they're already starting to have conversations, sending emails, writing letters, actively speaking with people as well. So NBA and NAM are both addressing that. So both have legislative conferences in DC late March, early April. So they'll both be meeting with representatives there talking about this. This will be one of the topics that gets brought up of, hey, if we really want to fix this, let's quit talking 50-year mortgages and let's start talking about this. Here's what it means. Here's how it affects things. So again, to emphasize, the more they hear about it up front and the more they hear from more people, that will help too. So, and we do educate them when we go out there and kind of, we don't have a long time with them, but we do try to say, hey, here's what this means. Here's what LLPA stands for. Here's what it is. Here's, you know, so that they have a little bit more well-rounded like picture and understanding of why we're trying to get rid of it, not just that we don't like them and they should go away, right? So, okay.
Yeah, I would encourage you guys to email Mike Lee, John Curtis, Mike Kennedy, Blake Moore, Burgess Owens, and who's the girl from down south? I don't remember. Celeste Malloy. I would encourage you guys to write them, email them.
Go to, do you have LO comp on yours?
Oh, yeah.
Let's go there.
Well, I didn't finish with the other one yet.
Well, you're going out of order. That's fine. I have all these notes from Lauren I'm trying to make sense of, and Jason's just on a roll. It's great. Do your thing.
Reducing MIP. The FHA report for 2024 was released. The FHA is capitalized at 11%. The minimum or the requirement is 2%. So FHA has a lot more money in reserves right now than they need. There's a lot of reluctance to lower MIP monthly premiums because FHA delinquencies are up a lot, 4.7%.
They're up to 4.7%.
FHA originations are down, and they're expected to be down in 2026 and 2027. So there's a greater likelihood that they're going to start restricting a little bit more on FHA. This is not an MBA thing. This is kind of what they're hearing, is capping DTIs on FHAs to 50% to help mitigate some of those delinquencies. And let's see, what else did they say?
I'm curious everyone's opinion on that. Like, should we be writing loans at 56.99% DTI?
No, we shouldn't, because the additional add-ins for insurance and taxes, they'll kill people. I mean,
As they go up over time.
Yeah.
You'll end up in foreclosure.
Yeah, you have no room.
Bad lending practice.
Yeah, so that reduction to DTI, I was just curious on how the room felt on that, so thanks.
ending life of loan MIP premiums. And they're actually talking about increasing, one of the things they are talking about is increasing the upfront MIP in lieu of decreasing some of the monthly MIP to make, help with the DTI and affordability. Reform to LO comp rule. The mortgage banker side is, they're doing this to enhance lender ability to compete on pricing with y'all brokers out there. I think from a lender side, we've already been doing this, not necessarily above board, but the attorneys say it's okay.
At least you're honest.
Yeah, I won't dive too many details. You guys all know. I don't know, Brittany. What did NAMB say?
So NAMB also has this one. They don't have an initiative for reducing FHA MIP, but they do have the loan originator compensation. So the rules were established over a decade ago. They're outdated. They create unnecessary barriers to competition, consumer choice, and fair lending. The regulations need modernization to better serve today's borrowers while maintaining consumer protections, is their stance on it. So consumer impact is its overly restrictive compensation rules limit borrowers' access to diverse lending options and competitive pricing. When brokers can't effectively compete with retail lenders on compensation structure flexibility, consumers lose the benefit of a truly competitive marketplace.
Wow.
That's their consumer. Industry impact, brokers face competitive disadvantages compared to retail lenders. So you were saying the opposite of this, but who operate under different compensation standards, creating an uneven playing field that drives independent originators out of the market, reducing consumer choice and competition. So the solution is modernize the compensation rules to create parity between brokers and retail lenders, eliminate arbitrary restrictions that don't meaningfully protect the consumers, allow reasonable compensation adjustments to benefit the borrowers, and maintain strong disclosure requirements to ensure transparency. That's NAM's stance, and that's one thing they will be bringing up as they're speaking.
For us that have been around forever on a broker side, brokers used to be able to make like, I don't know, 15 points, something like that, 10 points. Then some reform came in and happened. They've asked the brokers to support lowering it down to 7 points. And what ended up passing was it restricted brokers to 4 points was a max. And then Dodd-Frank came in and restricted it more. One of the concerns is by opening up this can of worms with LO comp is the government restricting that compensation even further on the broker side. So I know NAMB feels like the Mortgage Bankers Association getting involved on our side is going to adversely affect the broker side. So we all agree that we need LO comp reform, but there's a little bit of dissension amongst how to go about doing that.
It's also hard to get lenders behind that because lenders, I mean, they're using that LO comp to get higher producing originators. So if they come out of the gate and say, hey, we're gonna reduce our comp, you think their competitors are gonna do it too? I mean, it's hard to get lenders on board because that's how they incentivize top producers and keep their top producers.
Yeah, from a lender side, lenders can bury a lot of the costs and a lot of the profit and everything else in back-end margin and corporate margin and all that other stuff and pay the LOs whatever number they want. Of course, the interest rate's going to be higher than what the brokers quote. But everything that the brokers have is it's on the LE, it's on the CD. And so I do think creating some of that transparency from both the lender side and the broker side would be beneficial to all parties.
Any other thoughts on that topic in the room? Thought you guys would have more to say about that.
Does the MBA ever discuss, or NAMB, either one ever discuss the changes in the way that we get paid? Since we can't really, we have to be paid.
Like a 1099 versus W-2? On the list.
In there?
Yeah.
That's on
we
Brittany's
can-
list. I'll
we
let
can-
Brittany take that on right now.
We can jump to that one real quick. Oh, I just lost my whole schedule. So yes, bringing that up, that has been brought up in the past, and then it was kind of pushed aside for a little while. But that is an initiative that they have this year, is going back in. It used to be there, and then or they at least had the, what was it called, 2106, where you could write off some expenses. And they did away with that, which then made it like impossible to do, right? So they do have that initiative to bring up the reasons why we should be able to be paid as a 1099, similar to other salespeople, realtors that are getting that exact same type of income, right? So pushing for that, explaining why it's important, what the costs are that we have as an originator, that we're not able to take any benefit of write-offs or anything with that. So that is one that is back in being discussed. Chris?
Just be aware, because I had this conversation, I lost an LO to a company who says they can do 1099s, and my opinion is we couldn't. And so I talked to my accountant, and someone can correct me if this is wrong, maybe my accountant's wrong, but like, if you don't take advantage of writing off things, and you just go 1099 and you think it's gonna be good for you, it's better for the company, because they now don't have to pay the
Payroll taxes.
You have to pay those now. And so if you want to go 1099 and think it's the best thing to go do in the whole wide world, I can't wait to go 1099, well, you better be taking advantage of the other side, you know, the write-offs or whatever, and do the real numbers, because it actually might end up hurting you, you know? And so just something to think about. It's not all rainbows and unicorns on that side. So
Wait, you're saying we need to understand all of the numbers?
yeah.
It sounds good. The other thing to piggyback off Timber is each state looks at it differently. So from a federal standpoint, you can go, you're self-employed, you can go as a 1099. I believe that in the state of Utah restricts certain things that make it more challenging to be 1099. And other states have similar laws in place, so make sure you're checking out your state laws.
Questions or comments on that? Everyone's? Okay.
Mortgage banker, one of the biggest things that they're doing this year to piggyback off of trigger leads from last year is now ending the tri-merge mandate on credit reports and pushing towards single file reports. So I don't know how you guys do your credit reports and things now, but from what I understand, if you could set up your credit pulls to where you pull one bureau, if the score is above a 700, then that's all you're going to get is that one bureau. If it's below 700, then it'll pull two bureaus, and then if it's below a certain another number, it'll pull all three bureaus. So the MBA is proposing that exactly that. So you choose your favorite bureau, so to speak. You have that credit score pop up. If it's above a certain number, then you only need one bureau. That is the big thing that they're advocating for this year.
Is that just to lower the price of credit pulls and stuff?
It is. Yep. Yeah. Yeah. I mean, consumers. I mean, I've talked to a lot of you guys and other people in the industry, and to see how much it costs to pull someone's credit. Back in the day, we'd get, you do these Facebook leads and Google AdWords, all this stuff, and you get these people, and they go, I don't know how my credit is, and I used to say, oh, let me pull your credit, let's see where we're at. Well, now it's like $100. I mean, I don't know this person from Adam, and I don't need to look at a 450 credit score.
Isn't the biggest concern with that, though, is that if they don't mandate who the tri-merge or the single merge is pulled through, then you've got fair lending issues, because you've got one lender using one credit reporting agency that has a different calculation on the score, and others using a different one, and so there could be fair lending issues. So I think, isn't that some of the issue?
That is some of the issue, but you were at the MBA annual conference.
Yeah.
From what I understand, you guys correct me if I'm wrong, back when credit started to be pulled, each of the credit bureaus, Experian, Equifax, TransUnion, were all more regionalized. And so certain companies that were in the Southwest would report to one of them, and then the West Coast would report to another one, which created a lot of the discrepancies amongst everything. But in today's day and age, it's so easy for them to just push a button. It actually reports to all three. I've seen massive discrepancies amongst the 3 bureaus, but most of the time, if someone's got good credit, they got good credit. If someone's got shitty credit, they got shitty credit. I mean, so it could, that is, I would imagine, a concern, but the NBA hasn't expressed that or said anything about that.
That also carries you back to your LLPAs though.
It does
Because
carry
if you
back
get
the
your
LDS.
one score that's 7 and you're like, okay, I'm good, but what if your other score was 720 and now you're in a different LLPA bracket? Anyway.
I mean,
Ties it
somebody
up.
shouldn't be penalized for refinancing their house to go to a lower rate, right? I mean, they're more highly penalized to do a rate and term refi than they are to buy a house. I mean, that to me is the dumbest thing. I mean, you're putting this person in a better situation. Why are we now penalizing them more? Anyway, that's my 2 cents.
So NAMB does not have the not a tri-merge, but using just one bureau on their initiatives, but they do have the costs of the credit reports being brought up, and then also the cost of the rapid rescores and the consumer being able to pay that rather than us having to take that fee. So that is another thing that they are addressing, bringing up that these credit report fees have increased in cost in an absurd amount, which is not serving anybody other than the people that are pocketing money for those fees. And then rapid rescores being a benefit of the borrower, that helps them be able to get into a better position. That's helping them update their credit appropriately, right, for what it's supposed to be showing. And they should, since they're the benefit of that process, be able to pay for that fee. So that is something that is being brought up this year to be discussed and hopefully taken action on and see some change there so that we don't continue to go year after year and get up to $500 credit reports, which I hate to say, but that just really might not be like too crazy, right? Yeah.
Yeah, one of the things that I've been working or talking with the NBA about and advocating to them about is making the credit bureaus, making more like a utility. It affects everybody. It doesn't matter whether they're getting a mortgage, they could be getting a car, they could be getting a credit card, no matter what it is, and they're paying a lot of money to have their credit pulled. So my stance or my approach is having the government treat it like a utility, electric company, power company, and limiting what those cost increase can be. Facilitating the GSEs to do streamline rate and term refis. This is a CFPB thing to allow them to do that. It'd be great if we could do that on a conventional loan, similar to like we do on an FHA loan.
Amen.
Yeah, I know it would make my life easier as an originator.
Sorry, I know your payment's going to drop $300, but we can't refinance you.
Yeah.
So it's
Exactly. Anybody, have you guys heard anything on that at all? Okay. Yeah, so watch for that.
feedback on that we can share. Do we like the idea? Okay.
Awesome. Address the supply by improving construction and condo lending offerings from the GSEs. The government on one hand talks about housing affordability and all these things, but then they have all these rules built into Fannie, Freddie, and everything else that prohibit, low-income earners from actually qualifying to get into these places. So I think advocating for tearing down some of these walls and rewriting some of these guidelines would be beneficial. Does NAMB have anything on that?
Not on that one.
Revise insurance requirements on condos to expand eligibility. I don't get in the weeds too much on insurance, so maybe an insurance person in here can. Steve?
Steve, you should be hanging on every word Jason says.
Yes. About
Reaction in the room, we know why that would be helpful and why that would be important for so many buyers. So that is a big one that they are working on this year as well, is to get that increased and show the obvious reasons to us anyways, why that would help. Yes.
Would that be everywhere nationally, or is that just?
Yeah, yes. Yeah, not just Utah, that would be national. So, yeah. Okay, we're out of time. We were worried we wouldn't have enough to talk about, and we clearly had plenty to talk about because we didn't cover it all. Does anyone, though, have any questions, thoughts, comments that you want to share before we wrap? Chris, then Caitlin, and then I'm sorry, Angela, thank you.
Would it take too much time to say, like, of the concerns talked about, like, what's the priority of everyone, or does that take too long?
We can do that. What's the priority? Shout it out.
Yeah, or maybe credit reports.
LLPA's credit report costs.
Yeah.
AMI.
Anyway.
I'm going to throw that one in there. Okay. Okay. Are you taking notes by chance, Chris? Because that would be awesome. You're fantastic.
They're not amazing notes.
I don't. The notes are notes. That's great.
Yeah.
All right, Caitlin.
My comments on the AMI, I attended the forecast last week with the board. I don't know if anyone else was there, but they talked specifically about like home buyers are changing nationally. The Gallup index is, on a national level. People that are buying homes are a much older age bracket, and they're not jumping into a $200,000 condo. They're jumping into a single-family home. So the AMI thing coming up, if they got 3 kids, they can't afford the house that they need at those rates.
Yeah, you guys probably seen, but first-time home buyer nationally, the age is 40 average. Utah's a little younger. Repeat buyer, this one kind of blew my mind. She said it's 62.
Holy moly.
Wow.
That's
The average age?
average age of your repeat buyer, second home. That's insane.
Yikes.
So we obviously need to put some things in place to help people get into first home, second home, the homes they need as their family's growing or slowing, right? To help make this better. So Angela.
Well, just since Chris was taking such good notes, I think it would be awesome that, because we all have the same goal, I think, and like they said, if we can all email our legislature, if we have a cohesive message and we're all sending, not that we have to copy and paste, but to hit the same points. Like you say, like our top 4 things or top 5 initiatives that we really want to focus on, and we could all kind of have a, cohesive message to send.
So absolutely. So UAMP will send out the emails for our senators and representatives, not for the state, because there's like 150.
We'll send the website where you can
the
access
federal,
them all.
yeah, we'll send the website for the state people, but we can send the emails for on the federal side. And then I would encourage you to sign up for Mortgage Action Alliance. Whenever there's a hot button issue that comes out, and you have to sign up every year. So if you sign up once, every 365 days you got to re-sign up. But they'll send you an email and say, here's what we're advocating for. You basically click one button, it sends an email directly to your senators and representatives. So I'd highly recommend that.
Yeah, first off, great job to everybody that attended this today. When we set this up, I thought we're either gonna have really interested people or no one's gonna come because no one cares, right? Like they're gonna be like blah, blah, whatever. So thank you for taking time out of your day to come. It shows us that people are interested, they care, they want to see some change happening and be involved in this. So definitely Mortgage Action Alliance. You can also register with MBA and with NAMB. Just search their websites. I don't know the exact things, but you can get emails from them. They will email you out when what's happening with this bill, what's happening on this, what just got announced or passed or signed. So you can stay present, and then they will also send you hey, click here, and you can email or make some noise about this. We do want to make noise. I don't think I need to give this reminder, but I'm just going to give it. Be professional and kind when we make the noise, right? They're going to listen to us much better that way.
Stick to housing.
Stick to housing, yes. We will send a script, make it your own, right? But just the more we can build those relationships in a kind, professional way, we will get way better feedback from them. And then that's when things start to change and we start to help our buyers and our consumers and clients, right? So, last thoughts? Okay, awesome. Thank you.
Thanks, guys. Thank you.
Thank you to our sponsors, Lisa and Karen. Awesome, thanks. Oh, there's more food available? Is that? Go get some seconds or a plate to take home real quick so we don't waste any food. Thanks, guys. Register for Logan early because it could potentially sell out. Just FYI.